In today's fast-paced investing world, millions of people are chasing random stock tips, market rumors, and speculative plays hoping to strike it rich. Social media is filled with overnight success stories, but the unfortunate truth is that most of these strategies fail. They lack sustainability, they rely on timing the market, and they're built more on emotion than financial wisdom. The result? Disappointment, inconsistent returns, and portfolios that lack true purpose. The key to building long-term wealth and achieving genuine financial freedom is not about chasing the next big stock. It's about following a disciplined and proven path. That path can be found in dividend-focused ETFs. These funds provide diversification, income, and long-term growth potential, and when used strategically, they can change your financial life forever. This guide will break down 3 powerful ETF strategies, ones that many on Wall Street might not want you to fully understand because they empower you to take control of your money and retire on your terms. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button and don't forget to turn on the bell for updates on all our latest content. Why typical investing often fails. The average investor often struggles not because of a lack of effort, but because of a lack of strategy. Many people invest sporadically, choosing stocks based on news headlines or internet hype. They might dabble in crypto, chase high-growth tech stocks, or jump in and out of the market at the worst times. Others invest passively without ever adjusting their strategy as they age. These methods often lead to mediocre returns, high emotional stress, and poor financial outcomes. Typical investing fails because it lacks structure, fails to produce regular income, and doesn't compound effectively. Dividend ETF strategies solve this problem by offering a consistent, repeatable approach that grows wealth, generates income, and minimizes guesswork. These strategies prioritize stability and long-term success over speculation. With the right ETF strategy, you don't need to guess what's next, you simply need to stay the course. Strategy number 1, Growth Maximizer, 100% VOO. Surprising path to 1.39 million plus total wealth. The first strategy is for investors who want maximum long-term growth with minimal complexity. It involves putting 100% of your investment into VOO, the Vanguard S&P 500 ETF. This ETF tracks the performance of the S&P 500, a group of the 500 largest and most successful companies in the United States. The historical average annual return of the S&P 500 has hovered around 10%, including dividends. This strategy does not prioritize high current income, but it shines in its ability to build wealth over time. With an initial investment of $10,000 and a monthly contribution of $500, this simple one-fund strategy can potentially grow your portfolio to more than $1.39 million over a 30-year period. The reason this works so well is because of the power of compounding. Every dollar you invest grows on top of previous growth, creating exponential results over the decades. VOO doesn't offer high dividend payouts today, but as your wealth increases, you'll eventually have the option to shift into income-generating funds. This makes the Growth Maximizer ideal for younger investors or anyone in the wealth accumulation phase. Strategy number 2, Balanced Growth and Income. Blend SCHD/VOO/SCHG for income and appreciation. For those who want a mix of current income and long-term growth, the Balanced Growth and Income strategy offers a perfect middle ground. This approach involves combining a few powerful ETFs that each bring unique strengths to the table. SCHD, or the Schwab U.S. Dividend Equity ETF, provides a solid base of dividend-paying stocks with strong financials and reliable income. VOO, as mentioned earlier, offers broad market exposure and long-term growth. SCHG, the Schwab U.S. Large Cap Growth ETF, gives your portfolio a boost of high growth potential by investing in some of the top-performing tech and innovation-driven companies. To round out the strategy, VXUS, the Vanguard Total International Stock ETF, provides global diversification. Together, this mix of funds creates a portfolio that can both grow and generate meaningful income. Starting with $10,000 and contributing $500 monthly, this strategy can grow your wealth to around $1.2 million over 30 years, assuming an average return of 8%. Importantly, it also generates a respectable amount of monthly dividend income along the way, potentially $2,000 or more per month in retirement. This makes it a strong choice for investors who want the best of both worlds. Growth for the future and income for peace of mind. Strategy number 3, dividend income focus, 60% SCHD. Maximize current dividend income. If your priority is generating reliable monthly income, especially in or near retirement, then the dividend income focus strategy is the one to consider. This approach leans heavily into SCHD, allocating 60% of the portfolio to this high dividend yielding ETF. SCHD is known for investing in fundamentally strong companies that consistently pay and increase dividends. By focusing a majority of your investments in SCHD, you set yourself up for strong and growing cash flow. The rest of the portfolio is split between VOO for additional growth potential and VXUS to ensure international diversification. This combination provides a stream of income while maintaining some exposure to market appreciation. Over a 30-year period, starting with $10,000 and adding $500 per month, this income-focused strategy can grow your portfolio to around $1 million. What sets it apart, however, is the potential to generate more than $2,800 per month in dividend income by retirement. That level of income can cover essential expenses, fund travel, and reduce the need to draw down your principal. For many people, that's the definition of financial independence. $10,000 to $1 million plus detailed projections, 5, 10, 20, and 30-year growth. When people think about building wealth, they often overestimate what can be achieved in 1 year and underestimate what's possible in a decade or more. With these dividend ETF strategies, you can start small and still become a millionaire with consistency and time. With $10,000 invested upfront and $500 contributed monthly, all 3 strategies can produce meaningful results in just 5 years, with growth accelerating significantly after 10 and 20 years. By year 30, the Growth Maximizer strategy can surpass $1.39 million. The Balanced Growth and Income strategy can reach $1.2 million. And the Dividend Income Focus can exceed $1 million. These numbers are based on compounding at an 8% annual return and reinvesting all dividends. The beauty of this approach is that you don't need to time the market, and you don't need to gamble on individual stocks. You just need patience and commitment to your chosen plan. Calculation breakdown: how the numbers compound. The math behind these strategies is straightforward but powerful. Using a basic compound interest formula, we assume monthly contributions of $500 and an 8% average annual return. Compound interest works like magic over time because each dollar you invest not only earns returns, but those returns themselves begin to earn returns. It's like a snowball rolling down a hill, getting larger with each rotation. Even if you never increase your contribution, the effect of compounding becomes massive in the later years. After 10 years, you might feel like your portfolio is growing slowly, but by year 20, it starts to accelerate. By year 30, it's exploding. This is why starting early is so important. The earlier you begin, the more time you give your money to work for you. Even if you can only start with $100 a month, the habit is more important than the amount. Each of these 3 strategies has its strengths, and choosing the right one depends on your personal goals. If your main focus is building the largest portfolio possible, the Growth Maximizer wins. It delivers the highest total value after 30 years, thanks to aggressive compounding. However, it doesn't provide much income until you sell or shift into income-generating funds. On the other hand, if your priority is monthly income, the Dividend Income Focus is the clear winner. It may not grow your portfolio as high as the other strategies, but it provides a robust and reliable stream of dividend income that can support your lifestyle. The balanced growth and income strategy sits comfortably in the middle. It gives you a solid shot at growing your wealth while still offering meaningful income. It's a great choice for investors who want to prepare for retirement while enjoying some benefits along the way. Ultimately, the best strategy is the one that aligns with your lifestyle, risk tolerance, and financial goals. One of the most powerful things about these ETF strategies is that they're flexible. You don't have to stick with one strategy forever. In fact, many savvy investors adjust their approach as they age. In your 20s and 30s, you might focus on the growth maximizer strategy to build as much wealth as possible. As you enter your 40s or 50s, you may transition to the balanced growth and income approach to secure some income while continuing to grow. And finally, as you near retirement, you might fully shift into the dividend income focused strategy to maximize your monthly cash flow. This progressive approach allows you to accumulate wealth when you're young, preserve it as you mature, and utilize it effectively when you're ready to retire. It's a smart, sustainable path that takes advantage of every stage of your financial life. Choose the strategy that aligns with your goals. The truth is, you don't need to be an expert to build wealth. You don't need to chase hot stocks or listen to social media hype. What you need is a clear plan, a consistent strategy, and the discipline to stick with it. Dividend ETFs offer one of the simplest, most effective ways to grow your portfolio, generate income, and take control of your financial future. Whether you choose the growth maximizer, balanced growth and income, or dividend income focus approach, you're putting yourself on a proven path toward financial freedom. Start with whatever you have, $10,000, $1,000, or even $100, and add what you can monthly. Let time and compounding do the rest. Over the years, you'll be amazed at how your small, steady actions can turn into a massive source of wealth and security. If this guide helps you clarify your goals and take action toward real wealth, don't keep it to yourself. Share it, hit like, subscribe, and start the conversation. Your path to financial freedom is one smart step away. Thank you for watching WealthEchelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.